Hi. Usually we think of the income statement as the exciting side of the financial statements for small business owners. You got sales, gross margin, profitability. Well, this recent story is going to show you that you can have fun and save a bunch of money even on the balance sheet side. So we had a client start earlier this year, and they had a bookkeeper and the internal numbers were clean. And during the kickoff meeting, we went through the current bookkeeping process, kind of some tactical issues on some of the transactions. And then we saw, as we're going through the balance sheet, we saw an ERC receivable. It's kind of weird. I mean, we're in 2023. Most of the ERC, which is the employee retention credits, refund claims, they were usually in 21 or 22. And then a few months later, the IRS would have given that refund. And yet we're seeing it here on the 2023 balance sheet. So I asked the client what it was. Client didn't know. We went back to their books, and we saw in their accounting system that the prior accountant had made a journal entry, year-end journal entry to recognize this ERC receivable. So who cares? What's the difference? Well, the other side of the journal entry was a large amount of income that they'd recognized on their books. So we looked in 2022, 2023 in the banks. The refund never came through. We went back to the prior accountant and asked them about this ERC receivable. So they checked in their file. The ERC receivable had never been received, it had never been accepted. They weren't eligible for the ERC refund. So they said, okay, we'll go and we'll adjust the books and remove the income. So case closed, right? Well, I told the client, you should ask them whether the income was also included on the tax return, or was it just included on the books? We don't have access to the 2021 return, only the 2023 return, but the prior accountant has it. Have them check into it. So the prior accountant said it's probably nothing. Nothing went on the income tax return. We would have had to amend it to put it in there. Probably is not there. So I told the client, hey, you should check it. We see it on as a receivable still now. Something may have gone on there. So prior accountant checked it, and they saw, hey, the income tax return did have that income on there. They're going to go back and amend it now, an expected refund of $150,000. And that's a nice amount of cash for a small business. But if they would have waited till April and they would have only discovered the error then, it would have been 3-year statute of limitations that would have been already completed, and they wouldn't have been eligible to amend anymore. So who said that the balance sheet's the boring side of the financial statements?